Good morning. Most market participants appear to be miserable despite the best efforts of the government and the RBI. Political uncertainty in the death-stricken Eurozone has added to the gloom. The result is that the key indices are down for 3 straight consecutive sessions and remain below the 200 DMA. The rupee has recovered a wee bit but continues to be under pressure. FIs too remain wary of putting fresh money given the concerns of the tax laws and macroeconomic issues. The only positive that have emerged in the recent past is the drop in the crude oil price. Here too, there is no certainty that the current trend will prevail in the near term. We expect a lower start today as well, owing to the weak Asian markets. The US dollar is strong while the crude and gold are in the red. US blue chip and broader indices gained overnight, but the Nasdaq was flat. Sentiment on Wall Street was met by a major credit loss at JP Morgan and Cisco's cautious outlook. European benchmarks ended higher though. The IIP data for March 2012 will be important after the government shockingly slashed January figures. Latest inflation report is due on Monday. The Nifty sustained below the psychological support of 5,000 for the second consecutive trading session on Thursday. There was no respite from volatility despite the main indices trading in the oversold terrain. The current downtrend could worsen if the Nifty breaks below 4,925. Meanwhile, the government has deferred the long-pending legislations related to insurance and coal while clearing the MFI bill. There is no end to the ruckus in the parliament as UPA and principal opposition party spar over the issue of corruption in high places. The FIs were net buyers of Rs 3.17 billion in the cash segment on Thursday, while the domestic institutional investors were net sellers of Rs 1.43 billion as per the provisional figures released by the NSE. The FIs were net buyers of Rs 1.59 billion in the FNO segment on Thursday according to the provisional NSE data. The foreign funds were net sellers of Rs 3.57 billion in the cash segment on Wednesday according to the SEBI figures. Moving on to recommendations, the technical call for the day is: we recommend going short on ZMA futures below Rs 122 with stop loss of Rs 125 and a target price of Rs 116. Our derivative strategy for the day is long Hindustan Petroleum May futures above Rs 301 for the target price of Rs 311 and a stop loss placed at Rs 296. Thank you. Wish you have a great day ahead.